Difference between convergence and adoption. In the context of International Financial Reporting Standards, IFRS, convergence and adoption refer to two distinct processes. Convergence. Convergence refers to the process of aligning accounting standards used in different jurisdictions with IFRS. It involves harmonizing national accounting standards with IFRS to reduce or eliminate differences between them. Convergence aims to enhance the comparability and consistency of financial reporting across countries, thereby facilitating global financial analysis and decision-making. The International Accounting Standards Board, IASB, plays a crucial role in promoting convergence by working with national standard-setting bodies to develop and refine IFRS. During the convergence process, countries may adopt IFRS as their national accounting standards or modify their existing standards to be in line with IFRS. However, convergence does not necessarily mean full adoption of IFRS. It allows for some local variations or carve-outs to address specific national requirements or circumstances. Adoption. Adoption refers to the complete implementation and use of IFRS as the national accounting standards of a country. When a country adopts IFRS, it means that all entities within that jurisdiction are required to prepare their financial statements in accordance with IFRS without significant modifications or exceptions. Adoption of IFRS typically involves a comprehensive review of existing accounting standards and regulations, followed by the issuance of new laws or regulations mandating the use of IFRS. The transition to IFRS may require significant changes in accounting policies, systems, and reporting practices by companies, as well as training and education for accountants and financial professionals. It's important to note that the level of convergence and adoption of IFRS varies across countries. Some countries have fully adopted IFRS, while others have partially adopted or converged their national standards with IFRS. Additionally, some countries may choose to adopt IFRS for specific types of entities, such as listed companies, while maintaining separate standards for other entities. The extent of convergence and adoption depends on the regulatory framework and priorities of each jurisdiction. Thank you for watching.